Ever wondered how your child could save you money during tax time? Well, the answer lies in the child tax credit. This little gem is a provision of the tax code that's designed to help families offset the cost of raising children. And let's face it, those little bundles of joy can sure make a dent in the wallet. But here's where the child tax credit steps in to lighten the load. It's a financial boon for many parents and guardians, providing a much-needed respite in their annual tax obligations. So whether you're a new parent navigating the maze of diapers and late-night feedings, or a seasoned pro managing the chaos of teenage life, this credit could be a game changer. But how does it work? Who's eligible? And most importantly, how much can it save you? Well, that's exactly what we're here to explore. Stay tuned to find out how the child tax credit can put money back into your pocket. The child tax credit, in a nutshell, is a tax benefit designed to aid families with children. This provision in the tax code is a way for the government to give a helping hand to families, recognizing the financial burdens that often come with raising children. So what does this mean for you? Well, let's break it down. Imagine for a moment that you're at a grocery store. You've filled up your cart with all the essentials your family needs. When you get to the register, you realize you have a handful of coupons. These coupons reduce the total amount you have to pay. This is, in essence, how the child tax credit works. In the context of taxes, the amount you owe to the government is like the total at the grocery store. The child tax credit is like those coupons, reducing the amount you have to pay. The great part is these coupons are based on the number of qualifying children you have. But what counts as a qualifying child, you might ask? A qualifying child is generally a child under the age of 17 who lives with you for more than half the year and does not provide more than half of their own support. Now, it's important to note that the child tax credit isn't a one-size-fits-all solution. The amount of credit you receive depends on numerous factors, including your income level and how many children you have. So it's not as simple as having more children means you get more credit. It's more nuanced than that. The credit phases out at certain income levels, which means that higher income families may receive less credit or none at all. To sum it all up, the child tax credit is a way to lessen the financial load of raising children by reducing the amount of tax you owe. It's a helping hand from the government, designed to support families like yours. The more qualifying children you have, the less tax you might owe. But remember, it's not a simple equation. The specifics of your situation will determine how much benefit you receive. Basically, the more qualifying children you have, the less tax you might owe. Now, you might be wondering, who exactly can claim the child tax credit? Well, let's dive into the details to see if you could be among the many who are eligible. First and foremost, the child tax credit is for those who have a qualifying child. The child must be under the age of 17 at the end of the tax year. So, if your child is turning 17 this year, unfortunately, they won't qualify. Next, the child must have a valid Social Security number. The Internal Revenue Service requires this information to verify the child's identity. And no, an individual taxpayer identification number won't do. It has to be a Social Security number. The relationship to the taxpayer is also a crucial factor. The child must be your son, daughter, stepchild, foster child, brother, sister, stepbrother, stepsister, or a descendant of any of these individuals. This includes your grandchild, niece, or nephew. Now let's talk about dependency. The child must not have provided more than half of their own support for the year. In other words, they should be dependent on you, not self-supporting. Citizenship status is also a key requirement. The child must be a U.S. citizen, U.S. national, or U.S. resident alien. If your child was born and is living in another country, they won't qualify unless they meet the resident alien requirement. And lastly, the child must have lived with you for more than half of the year. There are exceptions to this rule, such as for children of divorced or separated parents. But in general, the child needs to reside with you for the majority of the year. So if you have a child who is under 17, related to you, dependent on you, a U.S. citizen or resident, and living with you for more than half the year, then you could be in luck. So, if your child meets these criteria, you could be eligible for the child tax credit. Scene script. Let's talk numbers. How much is the child tax credit actually worth? Now, one thing's for sure. The value of the child tax credit isn't a one-size-fits-all situation. It's a bit like fitting a suit, tailored to your specific circumstances. The value of this credit can vary depending on a couple of key factors: your income and the number of children you have. Firstly, Let's focus on the base value of the child tax credit. As of the most recent tax law, the child tax credit is worth up to $2,000 per qualifying child. That's quite a hefty sum, isn't it? But here's where the tailoring comes in. Not everyone will receive the full $2,000. The credit begins to phase out or reduce for individuals with a modified adjusted gross income of over $200,000. For those filing jointly, this phase-out begins at $400,000. What does this mean? Well, for every $1,000 of income above these thresholds, your credit reduces by $50. So if you're a high earner, you might not see the full benefit of the child tax credit. Now, let's talk children. The more qualifying children you have, the more your potential credit. So if you have 3 qualifying children, you could be looking at a credit of up to $6,000. That's 3 times $2,000. Quite a significant figure, wouldn't you agree? But remember, this is all dependent on your income. The phase-out rules still apply, no matter the number of children. So the more you earn, the less you might receive. In conclusion, the child tax credit can provide a substantial boost to your finances, depending on your income and the number of qualifying children you have. This credit is designed to support families, providing financial relief where it's most needed. As you can see, the child tax credit can make a significant difference in your tax bill. Claiming the child tax credit might seem daunting, but it's easier than you think. First off, it's important to know that the child tax credit can be claimed when you file your federal income tax return. This means that it's not a separate process, but part of your annual tax filing routine. Now, onto the forms. You'll need to fill out Schedule 8812, also known as the Child Tax Credit and Credit for Other Dependents form. This form is where you'll provide information about your qualifying child or children. Remember, a qualifying child must be under 17 at the end of the tax year and must have lived with you for more than half of that year. You're also going to need the Social Security number for each child you're claiming. If your child doesn't have a Social Security number, you can apply for one through the Social Security Administration. It's a pretty straightforward process, but it can take a few weeks. So make sure to do this well before tax season rolls around. Let's talk about income thresholds. The child tax credit is designed to benefit low to moderate income families, so there are income limits. If you're single, you can claim the full credit if your income is up to $75,000. If you're married filing jointly, that limit goes up to $150,000. Above these income limits, the credit gradually phases out. Now, what if your tax liability is less than the child tax credit? Good news. The child tax credit is refundable, meaning you could get a refund even if you don't owe any tax. This refund is referred to as the additional child tax credit. All of these details might sound overwhelming, but don't be discouraged. There are a lot of resources out there to help you, including tax professionals and IRS publications. And remember, the reward is worth the effort. With the right information and a little patience, you can successfully claim the child tax credit. The child tax credit is a valuable tool for families looking to save money during tax time. Now let's recap what we've explored in this video. The child tax credit, a financial relief for families, reduces the amount of income tax you owe. It's designed to support families who are raising children. Eligibility for this credit depends on several factors, including your income and the number of children in your family. And remember, it's not just a flat rate. The value of the credit can vary significantly based on your circumstances. But how do you claim it? Well, it's not as complex as it seems. You just need to fill out the appropriate forms when filing your taxes. In conclusion, the child tax credit is more than just a tax break. It's an opportunity to save, to provide better for your family, and to ease the financial burdens that come with raising children. Remember, every little bit helps when it comes to taxes, so don't overlook the child tax credit. Did you find this video helpful? If so, don't forget to hit the subscribe button, comment below, and give us a thumbs up. Subscribing allows you to keep up to date with our latest videos, ensuring you never miss out on any important information. We value your feedback, and your comments help us understand what you liked about this video and what topics you'd like us to cover in the future. And don't forget, by liking our videos, you help us reach more people, allowing us to continue creating informative content like this. Thank you for watching, and remember, your support is what keeps us going. We appreciate every like, comment, and subscription.